Should you have an LLC holding company, also known as an umbrella company? Well, smart entrepreneurs are always looking for ways to protect their wealth in their business assets. And after studying the tax code, many people have found a number of strategies that help business owners to maximize their wealth. And a widely adopted strategy is to divide one large business into several smaller business entities, all controlled and owned by one single holding company. So in this video, I want to talk all about how to create an LLC holding company and why. So we'll explore what a holding company is, how it is financed, how it is used. We'll also review some pros and cons and look at some examples all throughout the way. So I'm excited. I hope you are too. Stay tuned. Hey there, and welcome to our channel. I'm Sean with Life Accounting, the accounting company that saves people from high taxes and low profits. And if you want to maximize your net worth and you enjoy videos like this, make sure you give this video a like and you subscribe to our channel for more great content. Let's go ahead and dig in with today's topic, starting with number one, what is a holding company? So simply put, a holding company is a parent business entity. Also, a holding company may be referred to as an umbrella company. It's the same thing. And you should know that even though we're focusing on a LLC holding company today, a corporation can also be a holding company or a parent company. Now, the holding company does not conduct any standard business operations, meaning it does not manufacture anything. It does not sell any products or services. It just holds stock. Hey Sean, look, I can be a holding company too. Okay, kind of like that. But essentially, a holding company simply holds the controlling stock or other interests in child or subsidiary companies. Here's a visual representation of a holding company. Now, while a holding company does not conduct business operations on its own, it can own other companies that may sell services, may sell products, or manufacture goods. The holding company may also hold other assets such as real estate properties or real estate portfolios, vehicles, equipment, or anything else that can be of value to the other operations tied to the holding company. Now, it's important to note that a holding company may own 100% of a subsidiary, or it can simply have enough interest that allows it to maintain control through voting rights, which usually is anything more than 51%. Now, having control gives the holding company the power to oversee the subsidiaries or child companies that they run. So for example, the management team of a LLC holding company can elect or remove directors or managers. And the management of a holding company can also make major policy decisions like deciding to merge or even dissolve a subsidiary. However, each child company has its own management who runs the day-to-day operations of that subsidiary. So they make the decisions about the internal operations, like who to hire, who to fire, and how to operate more effectively and efficiently. So the people running the holding company do not participate in the operations of their subsidiaries. Hey Sean, look, I can have multiple subsidiaries or child companies as well. Okay, kind of like that. But let's go ahead and move on now and talk about how an LLC holding company can be financed. But really quick, before I do, I want to ask you, do you currently have an LLC or even an LLC holding company? Tell us in the comment section below. I'd like to know if I should continue to create these type of advanced videos that help out LLC owners. All right, so how can an LLC holding company be financed? So the people who are running the holding company are responsible for deciding where to invest its money. They have to constantly ask themselves questions such as, should we buy more real estate, or should we buy a manufacturing plant, or what other assets would be valuable to our holding company? But where exactly does this money come from? Well, a holding company can usually raise money in three different ways. First, by selling equity or interest in itself. So basically, they will be recruiting other people who want to hold stock in their holding company or want to hold stock in any of their other subsidiaries. Secondly, a holding company can simply borrow money from other investors or a bank, which is pretty self-explanatory. And lastly, it can reinvest its own profits that it gets from their subsidiaries, like their dividends, their distributions, rent payments, or other payments from their child companies. Now, raising money as an LLC holding company tends to be a little bit easier because you have more members and you have more assets. All right, now let's move on and talk strategy. So how can you use a holding company? So first off, a holding company can be used by any type of business, regardless of the size or industry. So small businesses or even single member entrepreneurs can start a holding company. For example, let's say that you want to buy a multifamily apartment as a real estate investment. What you can do is form two LLCs. One LLC would own the apartment building and the other LLC will be the holding company. Then let's say that later on you want to expand your investment. So you decide to raise some money by selling shares in your existing holding company, and then with that money you go out and you buy a profitable e-commerce company that is already set up as an LLC. After making that type of acquisition, you would still have one holding company with a new partner, and together you guys would own two businesses. One would be the apartment building investment and the other would be an e-commerce store. Now here's something really cool that you should know. When you have a holding company with multiple assets that drive revenue and profitability, then you can position your holding company for a major buyout. Like you could sell your holding company for millions of dollars to large investment firms or venture capitalists who love to do big deals. In fact, many public traded companies on the stock market are actually holding companies who constantly try to improve their revenues and increase the price per share of their stock. Interestingly enough, many people who buy stock don't even realize that they're investing into a holding company and not the actual operating company. For example, you've probably heard of Lowe's, the home improvement store. But Lowe's also has several other subsidiaries, including a popular hotel called the Lowe's Hotel. And on top of their hotel, they also have ownership in a diamond offshore drilling company where they mine diamonds, which if I had to assume, they're probably using their capabilities with the materials they can get from their Lowe's home improvement business and then the construction intel they have from their hotel ventures to cross over into drilling with their diamond offshore company. But anyway, the bottom line here is that holding companies are everywhere, and smaller holding companies have a great chance of being acquired by larger holding companies. So at this point, you should understand what a holding company is, how to finance one, how you could potentially use a holding company for yourself, and you should have hit the like button for the YouTube algorithm. Next, let's do a deeper dive into the advantages and disadvantages of an umbrella company. So advantage number one, and you probably guessed it, you have liability protection. So by having a parent LLC, which is the holding company, and then having multiple child LLCs, which are the subsidiaries, you have complete separation of each entity, which gives you powerful liability protection between each entity, because the debts of each subsidiary belong solely to that subsidiary. For example, if we go back to what we talked about earlier, let's say that your e-commerce store is struggling and you're not able to pay off some of its debts. Well, in that case, the creditor cannot go after the apartment building that the holding company owns, but instead it can only go after the assets that belong to the e-commerce store. Hey Sean, look, I have liability protection from Space Invaders. Okay, not like that. But actually, I have to make a small disclaimer, and that is to remember what you sign. Because if you sign an agreement saying that you are personally liable for any debts or obligations, then your LLC cannot protect you against that. All right, also, if you are a real estate investor and you have multiple properties and you are considering having multiple LLCs, I definitely recommend you check out my video on whether or not you need multiple LLCs for your rental properties. All right, advantage number 2 of an LLC holding company is that you have strong financing ability, or basically the ability to raise money. Remember, you can raise money from other members of your holding company, you can raise money by selling interest in your companies, and you can seek outside investment opportunities as well. Now, typically a startup or a new business is considered to be a great credit risk and may struggle getting any type of investment. But when you have an established holding company, they are viewed as less risky, so you can obtain a loan and then distribute that loan to a startup subsidiary. But that, of course, would put the holding company on the hook for any loan. All right, advantage number 3, lower management needs. Each holding company will have its own management team who runs the day-to-day operations. So that means the holding company members simply need to sit back and make strategic investment decisions. And typically these type of decisions don't require much time as it would to manage a company day-to-day. So of course this gives you a lot more flexibility. Okay, advantage number 4, a holding company may foster innovation. So when you have a business that is doing extremely well, as an entrepreneur, you try to do your best to maintain that positive momentum, because investing into a new idea or a startup within that business can be risky and bring the momentum down. But when you have a holding company, you can simply put your new business idea or your new startup idea into its own separate entity without compromising the other. In fact, Google restructured and formed Alphabet because it wanted to invest in other things such as Google Glasses or YouTube without compromising their core business model with Google Ads. So those are my top 4 advantages of a holding company. Let's go ahead and move into the disadvantages, starting with number 1, costs. The more entities you have, the more setup and annual fees that come along with it. And it can cost anywhere between $100 to $500 per year per each LLC that you own. So if you have 3 LLCs, you could have a cost as much as $1,500 per year. But it doesn't stop there. And many people don't even think about all the other expenses. Because listen, each entity would also need their own books, so you have separate bookkeeping expenses. You would also need to file taxes for each entity, and that could be quarterly or annual taxes on top of having to pay a tax preparer. And then managing all these costs, the bookkeeping, the tax expenses, could mean that you need to hire someone part-time or full-time, which of course adds on to extra costs. So overall, you have to weigh the advantages and decide if it's worth the additional cost. Now, I have a great video on the disadvantages of an LLC, which may help you decide whether or not you need one. Now, costs are usually the big one that deter people from starting holding companies. But let's go ahead and look at a couple other disadvantages. Disadvantage number 2 would be management challenges. Remember, a holding company is not involved in the day-to-day operations, but they do help elect the directors and managers of a subsidiary. So can anyone else see the issue with this? I mean, just imagine this for a second. Imagine a scenario where you know 10 times more than what your boss knows. That's essentially the same parallel between the relationship of a holding company and their subsidiaries. And if the wrong people are running the holding company, then they can drive the subsidiaries into failure. And lastly, disadvantage number 3 would have to be complexity. Holding companies often have more compliance and are governed under local, state, and federal laws. Even the way your taxes are done will be completely different when you have a holding company. company. And because of that, you also need to maintain important documents, records, assets, liabilities, and other properties completely separate from one another, which in itself is a skill of extreme organization. And if you end up mixing any of your assets or books or financials together, then any creditors that go after you may also go after your other business assets due to the lack of separation. So again, there are some great advantages of having a holding company, but if you aren't organized or you don't have a little bit of help, then you can find yourself with a huge headache trying to get everything sorted out. All right, now to sum all this up, just remember, an LLC holding company or an umbrella company is a business entity that does not conduct business operations, but instead it owns and controls other companies. And ultimately, the bottom line is holding companies help you to mitigate a lot of risk, but they can be costly and complicated. So it still may not be the right fit for everyone. So that's gonna wrap up this video. If you would like to see me make a video breaking down specifically how to create an LLC holding company, then make sure you tell us in the comment section below. And if enough people say they want one, then I'll consider making it. All right, well, that's it for now. As always, thank you so much for watching, and I'll see you in my next video.